Hi guys, how are you all doing? Yes, I know this is not my regular way of teaching or giving a lesson, but I thought this lesson I'm going to do from the computer. So first of all, I know, sorry for everybody that loves seeing my face on the camera. Sorry that you can't see me now, but I'll be guiding you through all the steps. First of all, I just want to show you quickly the Facebook page that I spoke about last time, Carlo's ICB students. And now the purpose of this post is for students to just ask questions and any other student on there to be able to help them. Also, I've got here, if you look here I've got links to all my videos, all my ICB lessons. And as I make new lessons, I will update this list. So everywhere from, let's see, where did we start? Bookkeeping to trial balance, learning module 1, learning module 2, and then there's all the learning module 3, part 1, part 2, part 3. So everything is in order. So you can just have a look, and like I said, I will be updating these things as I go. Okay, so I just wanted to show you guys the page and then make use of it. I haven't set it up completely yet. I will get to that. But in the meantime, if you do battle with a question, you can just create a post here and ask a question, and hopefully some other students will also be able to help you. I will also keep an eye on it every now and then to see how, if I can help with answering it. Okay, so that's step number 1 that I just wanted to talk about. So I'm just going to close here. And now the next thing is we're going to start with learning module 3, which is finalization and interpretation of accounts. Okay, so first let's get through the textbook. We've got the whole part explaining what is year-end accounting entries. You can just read through that. Then the purpose of running a year-end is twofold. In other words, calculating the profit and loss and then calculating the net profit. So you are all just welcome to read through that. And then we're going to start with learning module 3. So first of all, you can see we've got the trial balance. Now on my screen, I've got all I did so far was I copied that trial balance and I've got it right here on my computer, as you can see right in front of you. And it balances exactly like it. So I did copy all the different accounts correctly. Okay, so that's just a trial balance I've got on here. Okay, second of all, I just want to say if anybody is interested in this spreadsheet that I'm using today, just throw me an email in the description. You will hear that excuse me, you will see that there's a email address, carlohelp@yahoo.com. So just email me and I will send you this spreadsheet as well. Okay, if you are interested, but it should be quite easy to follow it. All right, so let's just go learning example 3A. We've got the trial balance, and then it says there, when running the year end, all balances totals appear in the nominal section, need to be null. Obviously, you need to close them off. And then a few handy tips. When we calculate a profit or loss in an account, we will always credit the account. And I'm going to show you all of that funny stuff now. And then focus on the trading account and the profits and loss account when doing these closing transfers. And then the following steps. Now, this part is extremely, extremely important. All right, first of all, and once again, don't worry, I will be doing these steps with you as we go. So first of all, you close off the sales return against the sales account. Okay, so you credit sales return, debit sales, it's all there. And then step number 2, you close off the sales account against the trading account by debiting sales and crediting the trading account. Then you close off the cost of sales account against the trading account. And then 4, the gross profit can now be calculated by balancing the trading account. Then continue with the calculations of the net profit by closing off the additional income accounts. You can just read through that. And then now close off each additional expense account, and the profit and loss account is now closed off. And then lastly, the drawings account is closed off against the capital account, and then the balance of the capital account now represents the owner's equity. So that's where you're going to be ending. All right, so let's get this game going now. Next, so I already explained, I've got the trial balance here, and then right here, all I've done was I just created your T accounts, your general ledger, and I've just already moved the balances from your trial balance. All those balances you see there, I just moved to there. Okay, so I just completed it. That's why it's marked in gray. And then here, sorry, so here and over here, I just told you what steps you need to take. So I've just marked it as you do it in order 1, 2, 3 until you get to rule number 8. Okay, are we happy? Well, if you're happy, I'm happy. Okay, awesome. Okay, so first of all, let's start this game. So first of all, it says close off the sales return account against the sales account. So as you can see, I've got my sales account there, I've got my sales return account. So they say close off the sales return account against the sales account. Now, I'm not going to fill in the dates and all the folios and all that stuff. So let's do that. So what you do is now, as it said in the explanation of the steps, now you need to credit sales returns and it's going to sales. So the other leg will be sales, the full amount that is in your sales return debit balance on the debit side. So it's 16,000. So now obviously, now we have to just bring it over to the sales account. So then the other leg is sales returns. As you can see, sales returns. You should know how this works if you've done bookkeeping to trial balance. Well, obviously, you can't do this subject unless you've done bookkeeping to trial balance. So the other leg there is sales returns. And then the amount is 16,000. All right. So we've done the first step now is closing off the sales return to the sales account. Okay, so what is step number 2? Closing off the sales account against the trading account. So in order to do that, you just need to balance it. So obviously from what we see here, okay, I'm just going to make those two blocked off because that will be my totals. Okay, so we've got 16,000 on this side, 84, so 84,800. So the totals are 84,800. And then the balancing amount, I'm just going to mark that with a yellow that you know that's the balancing amount, goes to the trading account. And if you balance it out, you will get 832,000. Perfect. Okay, so 83,000. So you're closing off, as you can see in the rule number 2, close off the sales account against the trading account. So since you've got a debit balance, this will move to the credit side of your trading account. So let's just go down to trading account. Let's just go down trading account. So sorry, I just want to go up again. See, it's the sales goes to the trading account. So trading account, there we go. So that will be sales. So remember, you just actually work crisscross. You've got a debit balance, it moves to the credit side. You've got a credit balance, it goes to the debit side of whichever account you need to move it to. Okay, so that'll be 832,000. Okay, so that's your trading account. So now we've done step number 2. So let's go up again. Let's see, where were we? All right. So we're closing off the sales returns account against the sales account. Done that. Sales went that way. And then we balance the sales account, closing it off against the trading account. So we just moved the total, the trading account, the balancing amount. I'm just going to highlight that whole thing. That's your balancing amount. And we move that to the trading account to the credit side. Okay, so now we are going to 3. If you might hear some funny talking in the background, my daughter is going through a very weird phase at the moment. And she loves talking to herself. Okay, so we've done number 1, we've done number 2. Now we'll be doing number 3, and that is closing off the cost of sales account against the trading account. So here we've got the cost of sales account, and that we are, it says closing it off to the trading account. Excuse me. Okay, so we've got that balance, and that has to go to the trading account. And that's the full amount, 520,000. Right? So we close it off, and now we have to move that to the trading account. And once again, you see here I've got a credit balance, so that'll go to the debit side of the trading account. Okay, so that is cost of sales. And I would like to hear your feedback about how you find it if I do it directly on the computers. I actually wish I thought of this a lot earlier, because I think it would have, of course, saved a lot of people from a lot of headache trying to read my very, very ugly handwriting. All right, so now we've done that. So see our cost of sales, that was step number 3, close off cost of sales to trading account. So now we're going down to step number 4, and that is calculate gross profit by balancing the trading account, and you close the balancing amount to the profit and loss account. So once again, now we need to balance, now we balance the trading account. Okay, so let's see what have we got. I'm just going to do that. All right. So let's see, the highest amount will be the 832,000. So that's the highest amount, obviously, between 832,000 and 520,000. So 832,000, 520. Oh, no. What am I doing? 832123. Okay. So now remember what they said. So they close the balancing amount to the profit and loss account. So that leg will be profit and loss. Okay, so let's balance that amount quickly. That'll be 312,000. So now once again, you've got a debit balance and we have to move it. Okay, I'm just going to highlight that. That is your balancing amount. And now let's move it here. So the trading account. Amount is 312,123. So far, so good. Everybody happy? If you're happy, I'm happy. Great. So that was number 4. So once again, we calculated the gross profit by balancing the trading account, and we closed the balancing amount off to the profit and loss account. So that amount went there. Okay. Remember, debit balance goes to the credit side of whichever account you have to move it to, or you have to close it off to. And if it's a credit balance, it would go to the debit side. All right, so just keep that in mind as we go. So we've done step number 4, and now we're going to do step number 5 and step number 6. Close off all the leftover income and expense accounts to the profit and loss account. Don't touch capital and drawings yet. Okay, because capital and drawings you do last, so close off all the leftover income and expense accounts only, to the profit and loss account. Great. Okay, so let's start. Okay, we've done that one. Cost of sales, waka waka. So now, okay, profit and loss. I'm just going to do this. So profit and loss, just to shorten it a bit. Otherwise, I'm going to take forever. 45,500. 45,500, and now that goes to the profit and loss. So that's rent income. Okay, I'm just going to write in caps now. So forgive that. What was the amount for rent income now? Can't remember. 45,500. So, oh no, I actually don't like writing in all caps. Sorry. That is 45,500. Right. Okay. Remember, we closed off the rent income account on the debit side, so it moves to the credit side of the profit and loss account. Right, so now we go again. Okay, rent income, then it's interest on fixed deposit. So we're closing that one off. So interest on fixed deposit, just the full amount, 6,300. We're closing it off, and once again it's a debit, so that will go there. Oh, sorry, why don't anybody tell me I did that? It goes to the profit and loss account. And then interest on fixed deposit. And that total is 6,000. All right, so we've done that one. Now we've got insurance. Now, as you can see, insurance has got a credit balance, so that all goes to the profit and loss account. 14700. I actually think they made a mistake in their answer book. You know that? Because if you look at the interest on, oh wait, let me just see if I didn't maybe just bring a, just want to check. Interest on, oh, it's 6,000. Sorry, I brought, my bad. Where's that one? See, 6,000. I put in the wrong amount, so that was actually my fault. So let me just fix that. Oh, I did put in 6,000. I knew I saw it somewhere. All right, next. Where was I? Insurance. So this has got a credit balance. So it moves to the debit side of the profit and loss. So here we go, insurance. The amount was 14700. All right, so we've done that one. Sorry, I have to move up and down. Hope it doesn't irritate you guys. So insurance, and you've got the interest on mortgage loan. And once again, it's a credit balance, so it goes to profit and loss. Amount 7272130. Okay, so it's it. Close us off on the credit side, so that will go to the debit side. Interest on mortgage loan. No, it's going to write it like that. Interest, so 7272130. Okay, so that was interest on mortgage loan, wages and salaries, same story. Profit and loss 125680. And okay, credit side, so that goes to the debit side as well. And that's wages and salaries. Okay, wages and salaries 125680. 125680. Next one. So you just have to go through each and every one of them and just close them off to the profit and loss account. 17750. Telephone 17750. 17750. Right. Next, office consumables, profit and loss. It's a credit side, so it goes to the debit side. Excuse me. Going office consumables. I hope I can spell correctly. And that's 3123. Okay. Office consumables I've done. Advertising is next. Goes to profit and loss. 9200. So advertising. $9200. Okay. Advertising, general expenses. 8880. And general expenses 8880. Okay. Okay, we've got trading account, we've got the profit and loss account. Okay, so it looks like we've done all of that. Let me just double check. Okay, I did mention we're not touching the capital and the drawings account yet. So we've closed off the sales to the sales return to the sales account. Then we balanced the sales account. We transferred that amount to the trading account. Then we closed off the cost of sales to the trading account. Then we balanced the trading account, and then that balancing amount went to the profit and loss, account. So now that we've done all that, now we can balance so now we can balance the profit and loss account, which is the other step. Let me just double check. Yeah, remember your points. So what that was 5 and 6 we did there. Close off all the leftover income and expense account to the profit and loss. Don't touch capital and drawings yet. And then point number 7, balance the profit and loss account and close off the profit and loss balancing account to the capital account. Because obviously we are calculating the net profit now, and the net profit, either if it's a profit, it increases the owner's equity. If it's a loss, then it obviously decreases it. Okay, so let's have a look. So obviously this side will be the highest amount. So that's 3,63500. I can actually put in a formula just to do that. Hang on, sorry, that side's the credit side's the highest. Sorry, I'm actually just copying now the answers from the textbook. Okay, so this side was the highest side, added it up 36, and now we need to balance it. So it says there the balancing goes to the capital account. Now remember, in your profit and loss account, if you've got a debit balance, it's a net profit. If you've got a credit balance, that will be a loss. Okay, so when you balance your profit and loss account, it's 112160. Okay, I'm just going to highlight it that you know that is the balancing amount. So let's just check point number 7 again. Balance the profit and loss account. Close off the profit and loss balancing account to the capital account. So now we have to take this balance and we need to take it all the way to the capital account. Okay, so remember it's a debit balance, so it goes to the credit side of the capital account. So here we go. And that'll be profit. This comes from the profit profit and loss. I should have just used my abbreviation, but it's fine. And that's 112160, right? So now we've done that. Now we're ready. So we've done point 7, and now we're going to do point number 8. Close the drawings account to the capital account, and then balance, and then we have to balance the capital account, and that will represent the owner's equity. Okay, so let's do that quickly. So we're going drawings, we're closing this off to the capital account. Now because it's a credit value, it moves to the debit side of the capital account. So that's drawings, and that's 42123. Awesome. Okay, so we've done all that, and now we need to balance this baby again. Let's do that. Okay, so let's balance it. So the balancing amount is, just first add these babies up. So it's 275, 400, 430, 275, 430. So when we balance it, I can't spell. Balance, and the balancing amount is 233430. So let's do that, and that's the balancing amount. All right, so that was, I don't think this is actually too hard. Just follow the rules. Do not skip a point. Do it exactly in the order as what they say. So this is actually something you will just need to learn. Closing off, you know that this is the order in the way things must happen, because you move from the trading account to the profit and loss account, and from the profit and loss account to the capital account. All right, happiness. Well, I hope you guys are happy, and yeah, so that was easy enough, I believe. Okay, now the next thing we're going to be doing is, let's go, what are we doing next? Is the income statement, right? Now, as you can see, I've just moved that same, sorry, I'm just going through. Perfect. All right. So I just copied that trial balance. Sorry. Yeah, that's it. So I just copied the trial balance, and we are going to do the statement of profit and loss, which is also known as your income statement. All right, so you can just go read the financial statements of a sole prop, statement of profit and loss, So we're just going to be put it together. Now, your income statement or your statement of profit and loss, use only your nominal accounts, which is the N account. So I've been receiving a lot of emails, people asking me, how do you know you use a N or you use a B, and where do you get it? Now, first of all, your folio number, which you see there, is allocated to all your accounts, and it stays the same for the duration of your business. It never changes. So that's why you can pick up the folio amount from the previous month's trial balance. Excuse me, from the previous month's trial balance, because they never change. Now your nominal accounts, that's your income and expense accounts. Your sales, your income and expense accounts, and your B accounts, that's your balance sheet accounts. All the stuff. And so your balance sheet account, you're going to see now when we do the balance sheet, that's where we use the B accounts. For your income statements, you use only your N accounts. Okay. So now first of all, or second of all, I don't know, I've said a lot of first of alls already. So like I already said, only use your nominal account, which is your N account. Okay, so that's very important. And then another thing that you need to know, I just put this over here, is you need to know this by heart. They don't give it to you. So you need to know it's sales, less cost of sales, which gives you your gross profit. Then you have to add your operating income. Then you have your gross operating income. Then you have to less your operating expenses. That gives you your operating profit. Then you add your interest income. Then you get your profit before your interest expense and less your interest expense, and that will give you your profit for the year. Okay, now I'm just going to highlight the gross profit. Just see, these are all your adding amounts. Okay, and there. All right. So when you do your statement, statement of profit and loss, like I said, you use these babies. Okay, the N accounts. Now your sales is considered. Now, when they ask you to put in your sales amount, that is your sales minus your cost of sales. You can see I've written that over there. So now we've got sales, which is 848,123 minus sales returns is 16,123. All right, so remember, so always your sales total, it's your sales minus your cost of sales. So if you take that, that will be 832,123. Happiness. Okay, and then less your cost of sales. So, okay, I'm just going to highlight it and say, okay, we've used the sales returns. Now we have to less the cost of sales, and that's 520,000. So that's 520, 1, 2, 3. Okay, remember you have to minus them. Okay, minus that. So if you take 832,000 minus 5, that'll give you 312, 1, 2, 3. Okay, so now you've calculated your gross profit, right? So it's your sales minus your sales returns minus your cost of sales give you your gross profit. Now you need to add your operating income. So next we see the rent income. Is there any other income? No. Okay, so it's just your rent income. Just highlighting that. So your rent income is 45,500. Now you write it on this. Oh, you just write it over there. So 45,523. So then the total. Now usually you're going to see that now when we get to the expenses. If there's more income here, you would put them all together on this side. Now this is not a debit side. This is just a column. But you'll put it together, you add them up, and the total you will write on this side under your add other operating income over there. So if you had other operating income, you would add it in there, and then the total you would put over there. But we've only got the one, so the total is 45,500. Okay, sorry, I wrote one too many zeros there. 45,500. So now we need to add those two up. So your gross operating income is 312,000 plus 455 waka waka, and that'll be 357,500. 357,500. Great. Now we do less your operating expenses. So now all your operating expenses now. Now please remember and please note, when you put in your operating expenses, it's all the expenses except your interest expense. And please remember, your interest income doesn't fall under operating income. Remember, your operating income is stuff that you get via, your business, because interest income is interest you get from the bank for having a whole lot of money in it. So that doesn't fall under the operating income, and that's why you need to put that one side. Okay. So the interest income and the interest expense is a separate thing. So the only expenses, the operating expenses, that's the expenses that you need to run your business. Like you need to have insurance, you need to pay wages, you need to pay for the telephone, office consumables, all that stuff, that goes there. And then your interest income and your interest expenses come last. Okay? So let's just have a look. So I'm skipping the interest, and then we have to do the insurance. So let's put the insurance 14700. Insurance there. Okay, that's 14700. The wages and salaries. Okay, so wages and salaries. Let's highlight that baby. 125680. 125, yeah, 680. Then we do the telephone. 17750. Wow, they must do a lot of calling. 17750. And then we've got office consumables, which is 3000. Then we've got advertising, which is 9200. And then general expenses, which is 8880. All right. So is that all of them? 92, yes. Okay. So now we add all of them up. So that'll be 179210. You can see that there. So we need to less the operating expenses. So that is 179210. Okay. So all that is, you take those amounts, you add them up, and you put that total over there. Okay, so now we have to less the operating expenses. So that'll be 357,500 minus 179210. And then we get your operating profit, which is 178,290. 178,290. All right. So now, remember what I said. So now we've still got the interest on the fixed deposit and the interest on mortgage loan. So remember, the interest on fixed deposit is you've got a deposit and you gain interest. So that'll be your interest income. And now you need to add your interest income, which is 6,000. Interest income, which is 6,000. So that'll be your profit before interest expense. So that'll be 178,290 plus 6,000. So you just add those two up, and then you get 184,290. All right. And then less interest expense. Okay, so I've got that one. Interest on mortgage loan. Obviously, you've got a loan, you have to pay the interest. And that'll be 72,130. 72,130. Right. So that's 184,290 minus that. So in other words, the profit for the year is 112,160. Okay, let me just highlight. So the reason why I highlight this is to make sure that I do not miss anything. Okay, so this is quite straightforward. Your operating income, you just add them up on this side, put the total there. Then your operating expenses, remember it's only expenses that's used during the operation of your business, water and lights, rates, taxes, whatever. Put them on this side and just add them up. But remember, you need to less that. Then you add your interest income later, less your interest expenses. But please remember, you need to remember this by heart. All right. You need to know this by heart. They don't, as far as I can remember, unless it's changed, that they actually give you that table. Like I say, I've done this course in 2010, so it's about 11 years ago. But if they have changed it and they actually give it to you, you guys are very lucky. We had to memorize this. But if they don't, but please just to be safe, just do it. And remember, your sales is always your sales minus your sales return. Great. So now we've done the statement of profit and loss. Now next, we're going to look at the balance sheet. Now, like I said, the balance sheet, that's what a B stands for. So B for balance sheet accounts. So when you do your statement of financial position or your balance sheet, you need to work with a B side. Now, just a little note here. The balance sheet is based on the accounting equation, which is your assets equals your equity plus your liability. So in other words, your assets, your total of your assets must equal the total of your equity and liabilities. All right. And this works exactly the same way as what we said earlier, adding stuff, but I'll explain it now. You put your totals in on this side, and you put the balances in on this side, and your total will go on this side. All right. So once again, please know this format. Just know it will just be safer. Like I said, I don't know what's changed in the last 11 years. I don't know who got a carrot up his butt and then changed everything all of a sudden. I really do not know. But please, just to be on the safe side. Okay. So I said it's based on the accounting equation, and I will show you that once I'm done there. And you use only the balance sheet accounts, which is your B accounts. All right. So first of all, this is divided into your non-current assets, your current assets, which will give you your total assets, and then you have to work according to your then your equity and your liability. All right. Now, please remember also you do your statement of financial your balance sheet and your income statement. They work together, and I will explain that as soon as we get to that. Okay, so first of all, non-current assets. Now, you're not going to list every single item independently. They usually group them together. Like for instance, here we've got property, plant, and equipment. So now you have to go through this list. Okay, I'm just going to use another color. Let's use blue. All right. Okay, hang on. So when you start, you don't use your capital and drawings. As you can see, your capital and drawings go down there. So we're only working with your assets at the moment. So only your assets. Okay. So property, plant, and equipment. So that will be your land and buildings and your equipment. So I'm just highlighting those two quickly. And if you can see, it's 540,000 plus 60,000. That gives you 600,000. So there you go. That is 600, 1, 2, 3. 600,000, right? And then we've got your available for sale financial assets, which is your fixed deposit. There we go. That's 50,000. So that'll be 50,000. So please know the difference between a non-current asset and a current asset. Okay. So once again, we place them together here, and now we add them up. Here, your total for your non-current assets is 600,000 plus 50,000. That gives you 650,000, right? Now, please note, I just put the separation line in here, just that we can see exactly where it is. But usually when you do it, you don't have that separation line. I just did it to group stuff together. That it's easier to read. All right. Okay, so next we're going to do the current assets. So your current assets is your trading inventory, trade and other receivables, which is your debtors control, and then cash and cash equivalents. So let's go look at trading inventory is 70,000. Let's highlight that baby. Trade and other receivables, that'll be your debtors. Okay, I've done the, oh wait, trade and other receivables. That's 47730. And then we've got cash and cash equivalents. Now, in this case, it's only the bank. But please remember, if you've got something like a cash float or a petty cash, those things will be grouped together at your cash and cash equivalents. But for this exercise, it's only the bank, which makes it a bit easier. But please just take note of that. But we will be doing it, I think, when we get to learning module 4 or 5. I can't remember, but we will talk about that as well. So that'll be 15200. Right. So now once again, we add those babies up, and the total of your current assets is 132,930. Okay, so now we add those two up, because that'll be your total for your total assets. So that is 782,930. All right, so you basically just take this column and you put it in that format. Easy as that. Nothing really funny. All right, and now we're going to move on to the equity and the liabilities. So first, the owner's equity. First, it's the capital. Now we've got the capital there, which is 163,270. So that'll be 163,270, right? Plus your net profit. Now, please remember, we calculated the net profit when we did the statement of profit and loss. So we made a profit, which is 112,160. So we'll just put that amount over there. But please remember, if you made a loss, that will be, you will deduct the loss. So you plus the profit, you deduct the loss. So that'll be 112,160. And less your drawings. There's the drawings, 42,000. Okay, so if you calculate that, so 163,270 plus the net profit minus the drawings gives you a total of 233,430. Okay, so now we're carrying on. So we've done that. Now we have to look at your non-current liabilities and your current liabilities. If there's more, you will obviously add them there. But so let's see. So now we've got the mortgage loan. There it is. So that goes on there. So 482,400. Okay, that's the only non-current liability. So we'll just put that there, 482,400. And then we've got trade and other. Okay, well, I've done the mortgage loan. And then trade and other payables, that's your trade payables. That gives you 67100. So we're just gonna add that. So that'll be 67100. That's the only ones. If there was more, you would obviously add them up. and then 67100. Correct. Yeah, calculated. You saw the net profit. Blah, blah, blah. Okay, so now you add up your owner's equity, your non-current liabilities, and your current liabilities, and that total is 782,930. And during your test or your exam, this is where you get very happy because, as you can see, those two babies balance 782,930. So once again, like I said, it's your accounting equation. Your assets must equal your equity plus your liability. So let's just recap what we've done. You just need to memorize this type of block and your balance sheet accounts, and you just take this information and you add it in. Just be familiar as well with the groupings, like for instance, property, plant, and equipment. You have to add that together, put the total in trade and other receivables, depending on how many there are, cash and cash equivalents at your bank, cash float, petty cash, anything, you add them up and you put that there. You don't put put it in a line for each and every one. You just group them together. Okay, so just be familiar with that, but I'm sure that in your exercises, you guys will totally see that. Oh, what am I doing? Sorry, I'm pressing buttons which I shouldn't be pressing. Okay, so that then is your statement of financial position. And now, last but not least, we are going to learning example 3B. All right, now since we are dealing with a whole lot of formulas here, okay, I've only put in the 20.9 totals in here because I'm not going to calculate. Well, I'm actually not even going to calculate it. I'm just going to show you where you get the amounts of. And luckily, I know you've got everything in your in your textbook, so you've got it all in front of you, and you can just go and calculate that. So I'm just going to show you where you get the different information. Now, first of all, please, you need to memorize these formulas. In my day, they did not give it to you. You had to know them off by heart. Now, as you can also see, I just color-coded it. I color-coded it for you. So like I say, if you would like a copy of the spreadsheet, just throw me an email and I'll love to send it to you. Okay, so I really don't have a problem with doing that. I love to help you guys. You guys are absolutely great. Okay, so first of all, gross profit percentage. That is your gross profit divided by your total sales multiplied by 100. So the gross profit, there you have it. It's 110. Yeah, as you can see, it's 110 divided by your total sales. There we go, the 390 multiplied by 100, and then you will get to your answer. Okay, so gross profit divided by total sales. So the yellow one divided by the green one multiplied by 100. And then we've got your net profit percentage. So your net profit percentage is your net profit, which is the blue one, divided by your total sales, which is the green one, multiplied by 100. Okay, so net profit 32 divided by 390 multiplied by 100. Then we've got the return on average owner's equity. So once again, it's your net profit divided by your average owner's equity. So once again, the net profit is the dark blue one, that's 32. Now to calculate the average owner's equity, that is your owner's equity of the current year plus the owner's equity of the previous year. Okay, divided by 2. Just want to see, yeah. Okay, so the average owner's equity, blah, blah, where am I? Yeah, owner's equity, see, and you can see I put those totals in as well, just that you can see. So your average owner's equity is your owner's equity of the current year, 273, plus the owner's equity of the previous year divided by 2. And that's how you get that out. So that'll be 32 divided by, okay, in brackets, you've got it all in front of you. You should have it. 273 plus 209, and then you take that total divided by 2, and then you multiply it by 100. Okay. Then your current ratio is your current assets divided or compared to your current liabilities. So we've got your current assets, which is here, 107, compared to your current liabilities over here, which is 42. And then you just bring it to the smaller amount, which is where you basically take 42 divided by 42, which is 1, and then 107 divided by 42. That'll give you 2.55. Okay, so you just bring the lowest one of the two to a 1. So you do that by dividing it by itself, and then you divide the other number also by itself. Okay, to get to that 2.55. Great, and now we're doing the asset test ratio. That'll be your current assets minus your inventory in brackets compared to your current liabilities. So it's your current assets, there we go, 107, minus your inventory, 58, compared to your current liabilities. And once again, it works exactly the same way as what I explained with the current ratio. So this is the asset test ratio ration. So current assets minus inventory, and our point current liabilities, and then bring it just the lowest point you bring to 1, and the other amount then you just divide it by that same amount. Okay, now let's have a look. See, now we are at your average trade receivable. I'm getting tongue tied. Average trade receivables collection period. So you take your average trade receivable divided by your credit sales multiplied by 365. Okay, so now, okay, the average trade receivables or the trade receiver, it's the same as previously. That will be your trade receivables of the current year plus your trade receivables of the previous year divided by 2, and then you multiply that by 365. And your credit sales will be your total. Okay, so I just want to go back. Then your credit sales will be your total sales, which is that one, times 80%. Now, if you don't know where that 80% comes from, if you look at page 96, they basically tell you there, blah, blah, where is it? Yeah, 80% of all sales are on credit. So that's where you get that from. And there they give you also 75% of purchases are on credit. Purchases equal. So you just need to use that percentage at the correct formula. All right. So that's that one. So your credit sales is your total. Your credit sales is the total sales. That one times 80%. Okay. So your average trade receivables of the current year plus trade receivables of the previous year divided by 2 and then multiplied by 365. Okay, now credit sales, don't forget that. And then average trade payable settlement, that's about the same. Your average trade payables, which you see there, it's the red one, divided by your credit purchases. Okay, now please remember this is your average trade receivables. So if you go back to the page, that is the 75% of purchases are on credit and purchases equal 60% of the cost. So credit purchases equals your cost of sales times 60%. Times 60% times 75%. So you get that information on page 96. So 75% of purchases are on credit and purchases equal 60% of cost of sales. All right, so in other words, once again, your average trade payables is your trade payables of the current year plus your trade receivables. Your trade payables, sorry, it should be trade payables. Trade payables, sorry. Of the previous year divided by 2 and then obviously the total multiplied by 365. And then last but not least, the average inventory turnover is your cost of sales divided by your average inventory. And once again, your average inventory is your inventory of the current year plus your inventory of the previous year divided by 2. Okay, and that is basically the lesson of learning module 3. Well, I hope you guys enjoyed it over the computer. I don't know. You're welcome to send me some feedback on it. How did you find this? I will, if it works and you guys are happy with it, I will definitely try and do this more often. It all depends basically on the lesson, and because obviously it takes a bit longer to prepare it like this, but I do also understand that you guys can actually see what I'm busy with. So, because that board in the lecture room doesn't always work, and the camera doesn't always pick it up. But thank you guys. So like I said before, if you want me to send you this the spreadsheet, just throw me an email and just say this is for the financial statement spreadsheet. And if I do carry on with the spreadsheets for these things, it all depends on how much time I've got to prepare it, because like I said, it does take a bit longer. But anyway, I did enjoy this, so have fun and good luck. I'll see you guys next time, if that's okay. All right, good, and I'll study hard. Cheers, guys.